Hello and welcome to the full FX Unfiltered. This edition is in association with Digitec. My name is Colin Lambert, I'm publisher of the full FX, and I'm delighted to be joined by Stephan von Massenbach, who is Chief Revenue Officer at Digitec, and George Procipiou, who is Sales and Client Enablement at the same firm. Gentlemen, great to see you. Stephan, I'll start with you if I may. It's probably been about a year since we last sat down and had one of these conversations. What has been happening at Digitec in that last 12 months?
Great, yeah. It's probably been, about a year. Great to be back. At Digitec, we've seen great growth in terms of client numbers. We've increased our client numbers by about 15% over the last 12 months. That's a number of different reasons. We've had great success with regional banks. We've seen clients using some of our new and additional modules as well. That's been a successful year for us. We see great interest on the data front with the SDF still. That's still a product that's in great demand with clients requiring more transparency around price construction and price discovery. Our strategy in terms of building out offices in London and Singapore has worked well for us too, especially in conjunction with software as a service, where it's been great to have a presence locally in Asia too, where the trading day starts and a lot of our clients are starting up their systems. So that's been a successful part as well.
So this all sort of says to me that there is more broadly increased demand for FX swaps automation, which some of us have been calling for a few years or decades. I mean, is that the case?
Absolutely. Automation is still a big theme for us. Our clients are looking for more data sources, and also on the distribution side, they're looking for more tailored pricing. And we recently launched a new module, D3 channels, which allows our clients to tailor the trader price more accurately. To a much more granular level across volume bands and different events and channels. And that's been a great new feature. So George,
in terms of the client demands over the last year and maybe even going ahead now, what are they maybe to reinforce what Stephan's saying there, what are they really looking at here?
So they're looking to improve automation and build on what they currently have. So where we're seeing a lot of banks still using Excel-based systems, they want to move to more dedicated applications. And that's where we can help with D3 Sheets and our other latest version, D3 Lite, which is a web-based version. So allows
a web-based version of D3 Sheets.
Correct, yeah, and allows customers to move away from Excel-based spreadsheets to an application that is dedicated for swaps pricing.
Yeah, and I guess then also that the Sheets is fed by an increasing amount of data.
Yeah, exactly. We're seeing that from customers that they want additional data sources being pumped into D3, and we can offer that for a variety of routes, and we're pretty agnostic in terms of what we can bring in.
Yeah. On that sort of this whole evolution piece, well, I've got you. Are you seeing a different approach from maybe global banks to regional banks? Is there an increased demand for more flexibility?
Yeah, for sure. For the global banks, we're seeing D3 Sheets are kind of thick client, which allows all the more customization, more bells and whistles. That is something geared more towards them. And for the other smaller banks who are maybe just starting to migrate to use specific applications, that a web-based version like D3 Lite suits the needs and provides that incremental step that they are after, really moving from Excel to some sort of dedicated application.
Yeah. So effectively, it's all about helping them on that journey, because they're not going to go from A to to D.
That's it. Yeah. That's exactly it. And the conversations we're also having is, they want to build it out into the scope of their future plans. So starting with something smaller, just to be able to control spreads and margins, and then as they go along the sophistication curve, maybe in the next few years, that they can have a more robust D3 Sheet system.
Yeah. Okay. I think for those playing bingo back in the office, we've had a couple of mentions of data, but we do need to talk about it more, because this is actually the backbone really of how we're automating the swaps market. What's happening in terms of like data provision from your point of view, Stephan?
So data has been an important conversation for all of our clients. We've seen changes to some of the market data sources, higher update frequencies, more density, and our clients are looking for systems that are able to cope with that kind of update frequency and the density of new and additional market data sources. And then we've also seen many banks move to pricing that derives FX swap points of interest rate products. They are usually traded on the exchange, so higher update frequencies too, and much denser market data sources, and so systems need to be able to cope with that. But generally speaking, we've seen a theme of clients wanting to add more market data sources and be able to have greater flexibility in their price construction and more granularity. Basically.
Yeah. So the interest rate stuff, obviously, I get it. We're going quite old school there, aren't we? How it used to be worked out. I mean, are there any other sources, any other ways they're using the data to sort of come up with a pricing, or is it really still a question of, okay, I can derive it from the interest rates, which we finally got interest rates again, after decades of nothing, and it's the straight swap points, or are there other little nuances around?
I mean, that's sort of the main theme. Some clients are running their own models that we're feeding into our systems and infrastructure, and that's really sort of the distribution use case that clients are focused on, being able to distribute their core price curve to downstream systems and be able to tailor it according to client channel and distribution channel.
Yeah, and that's quite important, isn't it, for clients, that they actually do have that ability to tailor it. I mean, what are you experiencing in terms of how your clients are actually using it downstream?
Yeah, with D3 channels, the conversations we're having, it could be used in multiple areas, whether it's on the trader side or further down to the middle office, or even on the FX sales side, for them to be able to build on the trader price. So depending on volume and tiering of how they want to tier a particular customer, it gives the bank that customization around the original trader core price.
It does sound like, in a way, the levels of sophistication of pricing is actually now finally starting to move upwards, of course. But I mean, is that the case? We are seeing a much more sophisticated pricing engine, more generally.
Yes, I would say so. We're able to provide the application, the backbone there, with rules and automation. From that point of view, if prices go off market, things can go indicative, giving that flexibility to the trading desk that they wouldn't have necessarily with just an Excel spreadsheet. Yeah.
So where does this all play out then, Stephan, in terms of the broader market structure change? Because obviously we shouldn't refer to the spot market, but it is still our benchmark, and NDFs have been there for quite some time. Swaps is still coming along. What's been happening in terms of market structure change in FX swaps?
So in terms of market structure, FX swaps is a different market to maybe FX spot or the NDF market for that matter. So price discovery is a little bit more complex than in the sort of transparent FX spot and NDF market. So that's been an important element, trying to get a view of different market data sources and being able to incorporate that into the pricing. And then, of course, the available venues, clubs, it's a different way of interacting with those, more like equity markets, order-based rather than a streaming market as such, unless you've got access to bilateral liquidity. But broker markets and primary venues are still an important part of trading activity, especially on the dealer-to-dealer side.
Yeah. So I mean, is then part of the future we need to look at getting some of this non-electronic data into the platforms? You mentioned brokers. Voice brokers, a lot of them operate on a hybrid basis, but is actually a big part of this actually trying to get some of that data, which I guess they call unstructured data, I guess. Showing my experience on data there quite nicely.
What we definitely see is that far-side clients are asking for greater automation. So they are requiring greater automated return of prices, auto-priced swaps and forwards. And so banks are looking at technology solutions to be able to provide that service that relates to FX swaps and forwards. And that's an important part of what drives the automation. And of course, banks are looking to do more with less, price more currency pairs, and so they're looking for an automated end-to-end process, which includes, as the last step, then being able to hedge or lay off risk, and hence there's great interest in automating those parts of the workflow now.
So does this mean like greater use of OMS, for instance?
Yeah, we've now got clients using OMS across all time zones. We've got a lot of conversations about how automated order placement can support traders in accessing liquidity and additional channels. That's very much part of our conversations, absolutely.
So it strikes me then, George, what we're looking at probably is if we sat down in a year's time, we are probably looking at a very slightly different market structure again, because we are only part of the way along the journey, aren't we?
Yeah, exactly. We're very, I'd say, pretty much at the start, but with emerging venues coming and more customer interest in having liquidity on these venues and price takers coming onto these venues as well, the market is definitely evolving. Yeah,
and it's something I look forward to, because, as I might have mentioned, I've been calling for this for quite a few years. So, gentlemen, thanks for your time today. Lovely to see you, and thanks everyone for watching. And we'll be back again very soon.
Thank you very much for having us.
Thank you.